Are FTX bag holders going to get any relief? What about the investors? Is there light at the end of this FTX tunnel? There's some more news that came out yesterday. We left the topic alone for a couple of days, try to let things cool down, see where they sit. And it looks like we've got some new developments. Looks like they've been able to find, looks like the FTX team has been able to find some money. But it also looks like we're getting a little bit more clarity on what was really going on at FTX and Alameda Research. FTX says it recovered $5 billion in assets, greatly increasing the amount that failed shitcoin exchange has hunted down to pay back creditors. Sounds good. The new amount doesn't describe any value to holdings of dozens of illiquid shitcoin tokens, Landis said. Such holdings are so large relative to the total supply that our positions cannot be sold without substantially affecting the market for the token, he said. That's right. They've got so many bags of illiquid shitcoins that they can't actually dump them because it'll just dump the price of the shitcoin. So they can't actually get rid of it. And therein lies a very important lesson about shitcoins. Okay? What you're paying attention to when you think that this project's getting huge and the community's massive and oh my gosh, there's massive adoption. All it is marketing, and it is illiquid markets where people are waiting to be able to dump you their bags. And those people are market makers, or in some cases, the devs themselves. Anyways, the new figure also doesn't include $425 million held by the securities regulator in the Bahamas where FTX was based. We're building financial statements from the ground up using the general ledger and bank transaction records rather than the previous incomplete and unreliable financial statements of the debtors. We're also well underway on plans to monetize over 300 other non-strategic investments with a book value of over $4.6 billion. FTX on Monday released a list of its top equity holders who have likely seen their stakes wiped out. Now, before we go to the that list of holders, I think that what I just said at the end was actually really telling us what their play is going to be. Just to repeat it, they're also well underway on plans to monetize over 300 other non-strategic investments with a book value of over $4.6 billion. So what they're telling you right here is, get ready. It's going to be a whole lot more shitcoining where this came from. It's going to be a whole lot more terrible investments and savings vehicles. Guys, this is all nonsense. They need to recoup their losses. There are some very wealthy, powerful people that lost a shitload of money in FTX. Make no mistake, they are not walking away from this table empty-handed. Anyways, let's continue on. Let's take a look at those investors, right? These high net worth investors that got totally freaking rugged by FTX. Brady, who was a brand ambassador, they're talking about Tom Brady, right? The football player, for somebody who's been living under a rock for the last 20 years. Anyways, he was a brand ambassador for FTX and appeared in a commercial for the company, owned just over 1.1 million common shares of FTX. Meanwhile, Bunchen, Brady's ex-wife, owns just under 700,000 common shares of FTX. The billionaire Robert Kraft, through KPC Venture Capital, owns over 110,000 Series B preferred shares of FTX trading, as well as 479,000 common shares and about 44,000 Series A preferred shares of West Realm Shires, the company that controls FTX's U.S. exchange. Other investors on FTX equity holder list were elite Wall Street hedge funds and growth investors, according to the bankruptcy document. That's right. Those names, right? Those hedge funds, they're going to get their money back. You're going to see, because they're going to fleece noobs with new and horrendous products that sound like they're going to promise the world. Well-known funds run by Tiger Global, Thoma Bravo, Sequoia Capital, Skybridge, and Third Point, among others, were listed as owning millions of both common and preferred shares of FTX. So if you think for a second they aren't going to come up with a ruse to pump those frickin' bags so that they can get out, you are very mistaken. The only thing that they may do is they may wait for the dust to settle. So you may not end up hearing anything about this for maybe 6 to 8 months. Just enough time for people to forget and for new noobs to come and get fleeced. Anyways, those investments are now virtually worthless. Yes, they are. Those losses don't necessarily mean just investor losses. They could also affect the money lost by FTX customers who deposited their cash on the platform. It turns out that those funds were not sitting on the FTX platform, but were instead being transferred to FTX's sister crypto trading firm, Alameda Research. Now, isn't that interesting? What we've heard up until now, for the most part, has been if you have been participating in a yield product or an earn product, so to speak, on these platforms, right? Which is essentially, just to make it really easy, you deposit your Bitcoin or your shitcoins in some cases and onto the exchange, and every day that you leave it, you accrue a certain amount of interest. Now, usually it's paid back to you in the shitcoin that you put on the platform. In some cases, it's paid back to you in another currency. So anyways, my point is that usually what we've seen when these problems occur, if you just have quote unquote USD, right? Or you just have Bitcoin sitting on the exchange, that usually hasn't been affected. But it looks like FTX and Alameda, it looks like they weren't just playing fast and dirty. They were playing in the dumpster. Okay, let's be honest. All right, let's dive into the last piece of this. This ties it all together. This is where, unfortunately, I don't think that we're seeing, I don't think the light at the end of the tunnel is hope. I think, unfortunately, for FTX, the light at the end of the tunnel is a train. FTX attorney reveals co-founder of company was ordered to create a secret backdoor for laundering money. That's where the last comment from that last article comes to fruition, right? A bombshell testimony has revealed the co-founder of cryptocurrency exchange FTX was ordered by Sam Bankman-Fried to create a secret backdoor to funnel money to Alameda Research. Gary Wang was told to create the secret line of credit of customer funds from FTX to the hedge fund. So this is fantastic. So your funds, according to you, were sitting there and they're not doing anything, but really there's a secret line of credit using all of that money. That money's not really there. This is freaking nefarious and dirty. And you're not going to tell me for a second that these people were sitting there not twisting their mustaches, right? No, these are evil MFers, okay? And specifically Sam decided to do sketchy shit, okay? This is wrong. Like there's no ifs, ands, or buts about it. So sorry, like this is like you know that you're doing evil when you're stealing people's money. Like, anyways. The FTX attorney testified that the back door was a secret way for Alameda to borrow from customers on the exchange without permission. No shit. So there you have it, guys. Look, there's going to be, I think there's going to be more fallout from this. I think that as they continue to reconstruct these financial records, I think that unfortunately we are going to continue to learn about other businesses that have been affected by FTX. That last article about a secret line of credit being created between the exchange and Alameda Research, make no mistake, the only reason that that's coming out now is because it had to come out now. So if you ask me, there's going to be more fallout from this. I don't know what, of course, but hey, we're going to continue to report on it. But again, this makes the case, guys. Is this really freaking worth 6% a month or 6% a week? Is that really worth it? Like, you think that you're getting it, but what people don't understand is that once they put their money on these platforms, your animal brain, the greed, okay, it takes over. And you're not going to take the money off of that platform. You're just going to leave it because in your head, you're making all these gains. Just remember, you can take self-sovereignty of your Bitcoin. Zoom out over a 10-year span. Bitcoin is returning approximately 200% annually over a long enough time horizon. Zoom out. It's worth it. Start to embrace low time preference. That's what all of these rug pulls and exchange failures are supposed to teach you.